If you follow the financial markets, you know the feeling, right? Every single day, it's just this storm of headlines. Charts are going up, charts are going down, and there's this constant pressure that you have to do something. It's chaotic and, frankly, it can be pretty darn stressful.
So, the big question is, how do you tune all of that out? How do you actually stay focused on your long-term goals when it feels like the whole world is shouting about today's crisis or the next hot stock? Well, in this explainer, we're going to break down one of the most famous philosophies out there that's designed to do just that.
All right, let's dive right in. The strategy is called buy and hold, and it's not so much a complicated technique as it is a mindset, a really simple, long-term approach that's designed to cut through all of that daily noise.
At its core, it's exactly what it sounds like. You buy assets and you hold on to them for a long, long time. But the most crucial part of that definition is that last phrase, ignoring the short-term market fluctuations. It's about making a conscious choice to just tune out the daily drama and keep your eyes on the big picture.
You know, what's really interesting here is how it frames the difference in thinking. Trading, that's all about the short term, right? It's about trying to use those price swings to make a quick buck. Buy and hold is the complete opposite. It's not about the price today or tomorrow. It's about becoming a long-term partner in a quality business and just letting that business do its thing and grow over time.
So, why would just ignoring the market actually work? I mean, it seems almost too simple, doesn't it? Let's take a look at the engine that makes this entire strategy go.
This breaks down the growth cycle beautifully. It all starts with step 1. You find and buy into a quality, well-run company. Then, as that business grows and makes profits, that's step 2, you as a part owner can get payouts like dividends in step 3. But the real magic, the secret sauce, happens in that last step, step 4, where you reinvest those payouts to buy even more, and that starts the whole cycle over again, but from a bigger base.
And this whole cycle is powered by what some people have called the eighth wonder of the world: compound interest. By reinvesting your earnings, your investment doesn't just grow, it accelerates. Your money starts making its own money, and then that money starts making even more money. Over decades, that snowball effect can be absolutely profound.
But hey, it's not just about the raw numbers. There are some very real, very practical advantages to this philosophy. It's really about creating a much less stressful path to your financial goals. So let's just tick through some of the big ones. It's simpler, so you're not glued to a screen all day, and you save a ton on transaction costs. But maybe the biggest advantage is psychological. It builds this defense against emotional mistakes, like panic selling when the market dips or buying into the hype at the very peak. Ultimately, this whole strategy is designed to let time work for you, not against you.
Of course, we have to be realistic here. This strategy is simple, but that does not mean it's easy. It takes a certain kind of temperament to actually pull this off successfully.
And this is the hard part. It demands immense patience to just sit there through market downturns that can last for months, maybe even years. It requires the discipline to not sell when your portfolio is down, and every single instinct you have is screaming at you to get out. And critically, that last point, the skill in choosing quality assets, is the foundation for everything. That means you got to do your homework up front. Look for companies with a strong competitive edge, a solid history of earnings, and good management. Because let's face it, holding a bad investment for a long time doesn't make it a good one.
This quote just gets right to the heart of the mindset shift you have to make. When you truly adopt a long-term view, all the day-to-day price movements just become irrelevant noise. You stop thinking like a price watcher and you start thinking like a business owner.
Which brings us to the final and most personal question. Knowing the logic, knowing the benefits, and knowing the very real challenges, does this philosophy actually fit your personality as an investor?
To sum it all up, buy and hold isn't about playing the market. It's about what you see here, forming a long-term partnership with good businesses you genuinely believe in, and then trusting that their growth is going to build your wealth over time. So I'll leave you with this question to think about. It's not about whether you're smart enough or if you have enough money. It really boils down to something way more fundamental. Do you have the patience to let good businesses do their work and just build wealth slowly, steadily, over time?